Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. We're hoping to wish you a happy Friday, but that's really not the case if you're a bull, because it's the first time since October of last year that we have dipped below the mark of 17,500 on an intraday basis. Yes, we have bounced back almost 50 points from that level, but it continues to be very, very precariously placed for the market. Seeing cuts of 2% as far as Nifty is concerned. Look at India Wix, that big spike there of almost 20%. So that tells you the kind of nervousness is there in the market. And of course, the market breadth is completely in favor of declines at the moment. 1,850 stocks declining for just around 200 stocks advancing. Sectorally speaking, all the sectors are trading with a bit of a red tinge. It's only autos which is managing to outperform, all thanks to the good earnings from Tata Motors as well as Bajaj Auto. And pharma, the other defensive, is doing its bit as well. Again, result reaction coming in for Dr. Reddy, and Cipla also seeing a bit of a bounce back. But other than that, Aisha, today you can't even blame the globe, because globally it's nothing much of a worry, but it's the local factors which are at play here.
Yeah, absolutely. I'm just looking at the Dow futures right now. They're absolutely flat. In fact, flat as flat can be actually. S&P futures as well, just mildly soft, about 0.3% lower. Nasdaq, yes, is down 0.5%, but from now up until when the US equity markets open, the picture could very well change. Asia has had a green close. European markets, as I see on my screen, not a rah-rah move, but yes, they are marginally in the green, flattish at best. So it seems like a very India-specific problem, Nikunj. The fact that they've been, we've been so light into this series. You've got a big event in the budget as well coming up next week. And, unfortunate as it may be, you've got the FOMC meet that evening. So the budget in that sense is
a precursor.
Yeah. I don't know.
Aisha, local factors, let's understand the root cause of the sell-off. The root cause of the sell-off, like you said, they are local factors. And even within local factors, these are not local economy related factors, these are not local political factors, these are factors which are specific to a group and factors which are specific in terms of the compulsions and the technicals of the market. Now markets, when they correct, it is selling which will feed selling. It is fear which in a sense will always thrive on fear. And when you see a large concentrated group of stocks which have been the darlings of the market, when they reverse completely for variety of factors, and when the selling is sudden, excruciating, and when there are no buyers on the other side, the selling will always intensify. The selling will intensify and it will start impacting other sectors as well. Now, my sense is that since the selling is not global in nature, which is that it's not because of 2008 crisis or 2013 crisis or a COVID crisis, then the selling should sooner than later get contained. The buyer today perhaps is on a strike because the buyer knows that if you want to come out, the event risk of budget, where if there is a change in the short-term taxation structure or the long-term taxation structure, that definitely will have a negative impact on the market. So the buyer perhaps is of the view that I will come, but I will come after I get clarity. If the budget risk would have not been there, if the budget was 6 months away, then then the buyer would have in a sense come out in selective stocks. That's trend number 2. Trend number 3 is that what happens to Adani group of stocks and what happens to the FPO. Because Adani Enterprise stock has fallen way below its FPO price. Obviously the anchor came in last week, on Wednesday the anchor book got closed. But what happens to the retail book which opens on Monday, where the discount, where the FPO current market price is below the FPO price. So what happens there? And if the Adani group has been accused of certain allegations by a brokerage firm, why is that we've not got a very detailed, comprehensive or any kind of a substantiated response which documents that whatever concerns which have been raised, what is fact, what is fiction, what is right, what is wrong. So that's the puzzling part for me. What happens to Adani IPO? Let's see how the management responds to it. But in terms of the texture of the market, it smacks of not an event, it smacks of not a factor, but it smacks of pure compulsion which is at play.
Yeah, and a lot of speculation and panic as well, I guess, in the market, because many are already debating whether or not the FPO is going to get repriced or not. I mean, why second guess what's going to happen when it's not in your...
It has to be repriced because if the current price is below the FPO price, which is what it will open on Friday, obviously the retail guy is not going to come out and going to buy the stock. So it has to be repriced. The provisioning allows you to do that. the way these FPO prospectus are formed, there is a clause which allows you to do that, and it has happened in the past also when markets have fallen. So I don't think, I mean, they have to reprice it if the FPO has to go through. Remember, it's a 50-50 IPO, which is that you don't pay everything upfront. You pay only half. So obviously you can change the pricing, or you can say, okay, I'll give you more shares. That all technicality, you don't change the price, but if you increase the number of offerings, automatically, things may come down. So that is a technical aspect which needs to be done, which I think should be done. But Aisha, it's just one of the phases of the market which was entirely unexpected. Just when you were cruising along and you were getting ready for a union budget like never before, you are now dealing with a sell-off like never before.
And it's quite swift as well. Naresh, you too have been maintaining the point that this is a very domestic specific story. The globe is in a completely different orbit altogether. But how bad could it get, considering we've broken below some very, very key levels today? We've given up 17,800 clearly and just about defending 17,600 on futures.
So it's already been quite bad if you look at the broader markets also. We did not see a very sharp recovery in the small cap indices. Today, if we look at the BSE small cap index, the Nifty small cap 100, we are back close to that September-October lows wherein Nifty had made a bottom around 16,800. So we've already done quite a bit. There has been not a recovery in a big way on broader market. So what I see is globally, any of the parameters which we look out for a risk on or a risk off, everything is on the positive side. Whether it is dollar index, whether it is Dow Jones, whether it is European indices, emerging markets. So in that scenario, all we can do is now wait out for the next 2 sessions, let the budget come in. Can the budget trigger a move further on the downside? That is what is to be seen, but nothing like we've seen previous bottoms also happen around the budget levels. So I clearly remember 2016 and 2021. Those were the times where one time there was a LTCG rumor, next time there was possibility of a COVID tax, and the next day onwards the market just rallied. So I would rather wait for 1st of Feb than to make a view today.
Wait for 1st of Feb before making a view, but we also have Nirav Chadda for a technical check on the market, as well as Kunj Bansal joining us on the show. Kunj, a quick first take as far as the market texture is concerned. Should one try and buy into this dip, or it's better not to be cute and just wait out, as Naresh was saying?
So few things here. If we look at the market movement of last, let's say 4 months odd or so. So while at the end of November, we did see the large cap indices, Nifty and Sensex touching fresh life high. But inherently there wasn't any strength. And what I mean is that the similar large cap, the similar rally wasn't witnessed in the mid and small caps. So to that extent, breadth of the market was not there, participation was not there at all. Even in large cap, it was more of sectoral and stock rotation, which was keeping the Nifty and the Sensex held on to the range that it was in the last 3-4 months, not moving in or moving out of that range. Now that range had to be broken technically, sentimentally, developmentally, whichever way we try to analyze the market. It had to be either broken on the upside or it had to be broken on the downside. Of course, it could have continued in that range for some more time. Today, market has chosen to break that range on the downside, obviously led by the various factors. So while there is seemingly a news flow which seems to be behind, but let's keep in mind that we haven't had any support of global money inflow over the last few months. In fact, if at all, there has been continuous outflow. Domestic investor has been trying to support, but how long will he or she continue to support, whether institution or individual? On fundamental side, if we come, then last about 15-20 days or odd or so, very quietly the commodity prices have started inching upwards. And for an Indian economy, that's clearly negative. Brent, which had fallen below $80, is now back to 88, 89, $90 odd or so. And the same is the case with metals. In whole of 2022, in fact, largely in the beginning of 2022, the metals fell, then they continued to hold on. But now in last 15-20 days odd or so, we have seen steel prices going up, we have seen tin prices going up, we have seen zinc prices going up, we have seen nickel prices going up. And with that, the result season is not supporting in a big way. So all these factors have come together and have resulted into this context of the market. So I'll conclude my answer. In terms of participation, I think for traders, they should strictly go by their stop losses and they understand it well. For the medium term investor, I think since we have, as you were discussing, a lot of events lined up in the next week, we have budget, along with that we have US Fed decision. Then of course with a little lag will come our own RBI's decision, but that will be way off. but at least certainly one can wait till budget odd or so. Doesn't matter if one has to buy in at a little higher level, but that will be an advice that will be there. Of course, if somebody wants for 10-20% of the money that he was holding on to, one can probably take some brave calls at today's level. One may or may not get these levels in the next week.
What will you do with Adani group of stocks?
So, for today's discussion, I would refrain myself from commenting on individual set of stocks, as I haven't taken compliance approval for this particular show.
Okay, Duresh, the viewers who are watching it, what should they do? I mean, someone's bought Adani Enterprise above 3,500, Adani Port, which has been darling of a stock, Adani Wilmar, largely patronized by retail investors. What should they do?
So ideally at some point of time you should have some risk management, right? And if it's already fallen 20-25%, it's like catching a falling knife. So you can't be adding more. And you have to understand that the real fact is there are very few shareholders. So we assume that there are a lot of participation in Adani, but people don't have the guts to actually buy.
How many Adani shareholders are there?
So Adani shareholders are 2.5 lakh shareholders.
So
retail.
Adani Enterprises 2.5
up to
lakh
September 22, maybe a little more in December, right? It used to be 70,000 before COVID. So the fact is, there are no mutual fund. Participation is not as great as the price action is, right? So if you take an example, Tata Power was the talk of the town previous year. The shareholding went from 15-20 lakh to 30 lakh shareholders. Out here, it has not been as huge. So, and there are no mutual fund holders. Only LIC is the domestic institution which has. So this is one of the only places where the stocks have gone up 5, 10, 20, 30x, but participation has not been there. If you look at any trend which has gone up at a time when Tata Motors does well, shareholders increase. This has not really happened because it went so fast, people did not participate. Even today, a lot of participation has been wherein people have sold in the futures and tried to buy the IPO, etc. So the fact is the participation is not great. And if you have taken that participation, you've taken that risk after a stock being up 20x, 40x, then you have to take that 20-40% downside. And this is not the first time. In 2021 also we had a 40% downside across the whole Adani group. So at these prices...
Let's look at that's a great one, Naresh. And Aisha, none of the institutional investors have a large exposure to Adani group of stocks. So whatever may be the reason, we've constantly argued that these stocks don't have large retail, HNI or float is not there. So the collateral NAV damage or the wealth damage is not going to be there. But Naresh has a great point. Let's look at, and I've not looked at the data, we'll see the real time. I'll request my producer to go back to the beginning of 2020, pre-COVID, when the world was normal. And let's look at 4 or 5 Adani stocks, Adani Port, Adani Enterprises, Adani Power. Let's look at some of those stocks and what do we have there? There you go.
1,259% appreciation.
Exactly. Now this is after a 30% fall. Yeah. So in a 2-year basis, which is a reasonable time frame, 2 saal, what is it in a long-term investor's life? Yeah. The stock is still up 12x. Adani Port is still up 57%. Adani Wilmar, I think the issue price was closer to 350 because it came recently, so you'll not get a lot of data. But Adani Wilmar,
92%. Adani Power, 188% uptake. So even with this fall, you're so in the money. Yeah. Even those little few hands who hold those stocks.
So some of the bigger ones were Adani Total, which went from 200 to 4,000.
Adani Green.
Adani Green. So these are the two ones, and they have the least shareholders compared to Adani Enterprise. I think Adani Total has 1.5 lakh or 1 lakh shareholders. So that's the reality because it went so fast, nobody really participated. So in that sense, and if you look at the overall float also is pretty low. 75% is promoter, another 20% is institution. In most of these cases, the whole free float is 2 to 5%. And Nifty as such is a free float index, and that's the reason we don't have a very high weightage. Otherwise, if you were to look at Adani yesterday, before this closing price, it was higher than Reliance Industries, the whole Adani group. It was just maybe 20% or 10-15% lower than Tata's, higher than HDFC. So it was almost the second largest group in India in terms of market cap. But in terms of free float, nowhere comparable.
Exactly. And that's the IPO, FPO discussion which we started having, that look, the FPO, if it goes through, it will bring the debt down and it will hopefully increase the retail participation. Now the challenge for the Adani group is that what can they do to make the FPO go through? Because price is no longer a bet or no longer the benchmark. What can they do to come back to really ensure that the retail guy comes in and the FPO in a sense sails through.
Yeah, that's going to be the tricky bit. Having said that, what's also getting clobbered are some of the large caps today. So yes, while the panic may have been hit because of the Adani Group names, but look what's happening with banks. SBI, by the way, bring up that intraday graph for you. That's fallen 5% lower on the futures right now for SBI alone. That's quite a sharp slide on SBI. ICICI Bank is down 4.25%. ONGC, IndusInd Bank, Hindalco. Look at what's happening with HDFC Twins. HDFC Bank is down 2.6%. Or for that matter, even a Reliance, which is now at the lowest point in the day, and the stock is now down almost 2.5%. Kunj, any of the banking names that you would buy in this fall? Or maybe wait for some more lower levels, but keep on your radar?
Yeah, so one will have to take that basic call on the market, that what one feels about the market. As we were discussing that now, of course, tomorrow and day after we are entering a weekend, and thankfully good, because that will give a lot of time for people to digest, to analyze, to revisit the valuations, for technical analysts to revisit the technical levels and things like that. And of course, in the next week, we have two major events. One, budget locally for us in India domestically, and globally, the US Fed alongside almost on the same date. And those are big events. But still, if I were to kind of look at the market, that it has corrected so sharply, not as much in indices, but certainly the individual sectors and stocks have fallen much more, which happens in the rising market also, that rising indices don't rise, but individual stocks rise much more. So in terms of the going forward, assuming that my view on the market remains a subdued or a range bound kind of market, I think the clear outperformance will come from IT and banking. So these are the two spaces where we will see safe haven, where we will see the return of the investors coming back in the market faster. Also backed by, let's keep in mind that whatever results have come till now, these two sectors, largely IT and banking, have shown reasonably decent numbers in terms of growth, in terms of profitability. The same hasn't been reported by, let's say, the limited number of results that have come in from some of the consumer durables, the limited number of results that have come in from cement and some others. So yes, clearly in terms of outperformers in a subdued market, investor interest, the buying interest will be more towards IT sector as a safe haven and banking sector as a participation of high beta, both in the rising as well as in the falling market.
So that's a take coming in. We'll come back to Nirav also in just a bit. But before we do that, let's take a quick break because the market seems to have stabilized for now. So let's take that quick break while we can.
All right, in conversation with Kunj Bansal and Naresh Mirani, and we are trying to understand that how deep this correction is going to get, what are the ways in which markets should now stall. Nirav is also there with us. Nirav, apologies, we are not able to connect with you earlier. What is happening in the F&O market? Are shorts clearly pressing positions? Are you getting a sense that now the market is in a firm bear grip, so to speak?
Yeah. Hi everyone. Just looking at the rollovers as a whole, we couldn't see this coming, frankly. Why? Because Nifty open interest, Bank Nifty open interest was lower than average, lower than the 3-month and 6-month averages as well. The PCR has been at comfortable levels. The VIX showed no sign of such a movement, which came in. We did not see it coming, I don't see very high leverage positions as well in the F&O market at this point of time. Yeah, there are a lot of delivery-based positions, at least in the mid-cap, small-cap space, but don't see much in the F&O market. So this breakdown has come in the near term for Nifty and Bank Nifty, but longer-term charts haven't really become bad. They are still positive, and you see good supports coming in now for Nifty around the 17,300, 17,250 odd levels, which is also the 200-day moving average. The chart is still positive. Bank Nifty chart similarly is very positive. 39,500 is a very good support area, which is what it is approaching to. I think both these indices will take good support, from these levels. Having said that, yes, there is good pain in the stock specific front. Where I'm very worried about is the mid cap and small cap space, because the chart for Nifty mid cap there is a double top kind of a formation, a top around the 32,500 levels, and from there the index has come down. The index has come down. So yeah, I believe in this last rally that you saw from sub 17,000 odd levels to 18,900 odd, you've seen a lot of buying going into this small cap mid cap space, because large cap weren't really moving up, and everyone's full to the brim, so there's not new money which is coming in into the market. So if this breakdown of 30,000 level of this index comes in, you will see a lot of pain, at least in this space. You will see this index come down towards the 28,500 levels, and a lot of portfolios going deep in the red of by 20-25%. So take care for that same, but from that near term perspective, large cap should bounce back again.
No recovery. You are all set to close at the lowest point of the day, and today it is just like a receding tide where it's IT, banks, everything is just getting crushed. Kunj Bansal, the concerns in the market based on past experiences that when you have a leverage sell-off and when bonds of a particular large entity they go down, it normally leads to some kind of an banking, not crisis, but banking imbalance. That could be a reason why some of the banks are selling off. Is this a thought which will continue to linger the market, or this is something which can be disregarded?
So, these, I don't know, should I call them interpretations? Not necessarily interpretations, but understandings or analysis we are trying to do on the basis of one single day movement. Maybe 2-3 days here and there you can add it to that, which to me looks a very short period of time. And there have been similar movement in the market also, as well. There have been similar news flow related to so many other sectors or stocks or business groups earlier also. So I think I would wait. As we have been repeatedly discussing, one, for the market construct itself. I feel that when market doesn't know what to do, and which it was looking like for 4-5 months when it was continuously moving range bound, market has to find some reason to break out of that range. The reasons could be to help it break upside, the reasons could be to help it break downside. In this case, the reasons, the news flow, the development that have happened have helped it break on the downside, which is very good, because a lot of money which was probably waiting on the sidelines will get an opportunity to come in. There have always been concerns on the valuation of the Indian market. Those partly will get addressed, or kind of that, okay, finally the valuations have corrected little bit. They may not still reach the so-called sane levels, or those so-called levels at which one would really be comfortable buying, because when those levels come, one never buys. And we have some events coming up, and especially the budget. Who knows, it could be completely a sentimental turnaround in the market depending on what government gives. I very strongly feel that despite the last budget of the government, the budget will continue to be capex oriented, continue to be more dependent on multiplier effect, more dependent for longer term employment generation instead of a populist budget. And for an economy and for stock market, that kind of budget will really be liked very much compared to a populist budget, which will be liked by the people but not by the market. So then we could again be sitting here and discussing that, okay, was that an opportunity? Suddenly the turnaround has happened. So I would, as I said, wait and watch. One, for the weekend to get over. Two, especially since the big event is coming in, and wouldn't be comfortable taking call on such a short 1 or 2 days kind of news flow development. Of course, the opportunities accordingly also get missed. I do realize that if one has to continue to take a bearish call, one will take better today instead of taking it on Monday, when, if, as I said, one is feeling bearish, the fall might be more. Similarly, if one has to take a bullish call, today is a very good opportunity, may not be there on Monday, but one doesn't know, so one has to go by the risk return. Coming back and concluding, I would not take a call so early of things having gone completely bad.
Kunj, we'll leave it at that. Thanks as always for taking the time out and joining in. 2% lower still, 17,617 on the Nifty futures, sub that mark for the Nifty spot. It's a 368 point fall, so pretty much around the session lows. Quick break. When we come back, the last half an hour of today's trade. No respite still, just a little bit of an uptick really coming in from the session lows, but we're still staring down in excess of 300 points. There you go, the Nifty currently sub the 17,600 mark. And to think of it, today has really been one of those days where you've not just breached 18K, that broad range that you've been stuck in, almost to 500 points month to date, start of the month up until now, but you've breached that crucial support of 17,800, which got time and again tested, but the markets did bounce back above that level. Does it feel like we're going to resurrect from that mark or close above 17,800? Looks a little tough, but who knows? Almost got half an hour still to go off trade. Let's see where we finally settle in for the day. The breadth, of course, is getting whacked out of shape. 171 stocks lower within the F&O segment, only 23 ups. Bajaj Auto, DRL, ITC, Ashok Leyland and Tata Motors being the namely winners in trade. And of course, Dixon is now down 21%. You know, all these stocks being F&O names are the ones, are the reason why you are also seeing this kind of an excruciating fall. And then, of course, it's all the Adani Group entities. Adani Enterprises is now down 18.6% on the futures. Ambuja Cement is down 17.25%. Adani Ports is down 17%. And ACC futures are down 14% right now as we speak. And yes, Adani Enterprises is sub its FPO price now. So just awaiting some communication from the management on whether they now reprice the IPO or not. Arpit Beriwal with us. We also have Neeraj Diwan joining in. Neeraj, hi, afternoon. Not really the best of afternoons. But why this panic, Neeraj, in the market?
Yeah, good afternoon. I think, we were all analyzing the budget and what can come in the budget and worrying about inflation and interest rates, US interest rates, inflation, and look where it's come and hit us. We were not expecting this to come and hit us. Like a report on Adani Group, which has got all the stocks down of the Adani Group, plus the banking stocks which are taking a knock because of whatever exposure they may be having to the group. I think it's more to do with the panic associated with, if there is actually something wrong in the accounting or something wrong in this group, that is what is impacting not only those stocks, even the banking stock. So that is the kind of panic we are seeing today. So I think it's very important for us to understand that at least there is a value which is there, which even in the group there are companies which may have some value. So I think this panic needs to stop, where we then take a fresh call on what the valuations are. We all been talking about high valuation in the group, high leverage. That definitely was a known fact. But we don't expect there to be any fraud or any accounting jugglery. That is something which no one really expected and should not be there. So I think that is the kind of panic which is there on the streets right now.
The shareholding in Adani Group of companies from an institutional standpoint and retail standpoint is minuscule. This is not HDFC Bank or Infosys where companies are owned by institutional investors. Where something goes wrong, the collateral damage for investors and HNI investors could be large. So these are largely promoter-driven, very tightly held companies. So if the collateral damage will not be large, so then why markets are panicking so much? I understand that why Adani Group of stocks are down. Technical factors, compulsive factors, there's a report and a fear factor is at play. But why is that having impact on other stocks if the shareholding is so minuscule?
I think, like I mentioned about the banking sector, banking sector is one which gets very vulnerable if any news comes of, even a possibility of some default which may or may not happen. So that sector is one sector which is coming out of a NPA cycle, and we don't want another, debt kind of a thing to come and hit them. So that is one sector which is highly vulnerable, and that sector has moved a lot in the last, few quarters. That is what had driven the markets to these levels, and that sector is taking a knock right now. So there, I think it is not only for high valuation; it is just a fear which may happen because of any default, which may not happen also because there's no reason to panic right now on that account. But because banking sector is down, which was really leading the rally, Adani Group stocks are down. So even when selling happens, then there is that there's margin calls, the other stock gets sold because of some losses in some sectors or some stocks. So I think all that contagion plays on the market. So I think that may be the reason why, and plus, everyone has been talking about high valuation of Indian equities, of Indian markets. So that is also playing on everyone's mind right from the beginning of this year. Whichever FI, or if you get some, the fund manager from abroad, they all talk about high valuation. And when other markets like China is more attractive, China is opening up, so they are finding other opportunities also, and there's continuous selling there. I think there's somewhere when markets give way like this on a day or two, then even the retail investors, the people holding on for a longer time, also start to panic and ruin their position. I think that the combination of all this may be playing on the market.
Teeny mini recovery from the day's low. How much have we recovered from the day's low? Let's look at the Nifty intraday graph. Sub 17,000, almost 17,500 has become 17,100. So it's a recovery of about 100 points. Naresh, finally.
So some bit of the good part is we've not seen a margin sell-off happening in the last, given that it's a Friday. So it's already done. So it's not. It's not been left. It's not been left for the last half an hour.
People have gone sold.
So that's the first indication that there is not further sell-off which is happening. So the market is basically light, and it has already got lightened off. So the open interest also, the numbers, it was the lowest when we started off in the expiry, plus 2 days of fall, and now we are totally out of the. So it is one of the lightest markets going into the budget.
Neeraj, would you agree with our friend Naresh here?
Absolutely. The last 2 days of selling that we saw Wednesday and today, I think definitely market must have become light now pre-budget. So, now it'll all, I think from now on, I think the news flow will be more budget driven, and whatever happens there, and then market can take a cue. But definitely market seems to be light now.
Okay, let's talk about a pocket which is actually holding out in the green, and that's clearly Auto, Bajaj Auto as well as Tata Motors. Neeraj, what's the take there? Is it still a buy on Tata Motors? Is there still upside available?
Yeah, I think so. See, Tata Motors has been underperforming, where our markets have been outperforming the last 1 year. But Tata Motors, even if you see the auto pack, compared to the four-wheelers like Maruti or Mahindra, it has underperformed. So if this performance that they've seen in the result this quarter is something which will see further improvement going ahead, which it looks like even the management is cautiously optimistic. That's how they worded it. I think Tata Motors, even from these levels, definitely has upside, but it's coming out of after 4, 5, 6 quarters of bad results. This kind of results look very encouraging.
Auto is definitely managing to sort of be the saving grace today, as is ITC, and so is Dr. Reddy's too, holding out quite smartly. ITC, in fact, is up 2.25%. DRL also reacting to its numbers, as is Cipla. So both these stocks as well are looking quite okay. Besides that, it's only automobiles actually which are holding out. SBI is now down 5% and ICICI Bank down a good 4.5% as we speak right now. Naresh, given the fall in the banks, if you had to take any fresh positions, maybe not right now, maybe once the poison gets out of the system, which banking stocks would you buy?
So I'll go contra right away, start off with building positions in SBI. The stock is back to 540, 550. 550 was the last major breakout point. So that's the one, and that has taken the maximum hit in the near term. Second, I would go with something like a ICICI, because it's also fallen 10-15% from the top. So at these prices, these are the two names. They were earlier leaders and they've lost leadership. They've come back to the prices where the whole leadership is out. It is very similar to what happened with IT. The whole IT pack took the leadership in September, October. The whole COVID rally is gone. So the outperformance is over in SBI, ICICI. So from here on, any bounce back, SBI and ICICI should be the strongest one.
Okay, SBI, ICICI Bank, Naresh sitting out with the performers from last year. But Arpit, what is your sense? Where within banks can one take fresh positions?
No, looking from the Bank Nifty perspective, we have seen a decent correction of 2,500 points in last few sessions. So talking about within banking, our top would be HDFC Bank. So HDFC Bank, look at the chart structure, it was quite outperforming, and that was the last bank to fall off. So overall chart structure, immediate basis, 1580 is a major support zone. So one can add near 1580-85 levels for an upside move towards 1650-1700 zones.
Intraday chart of Bharat Dynamics. Not sure what's happening there, but that stock is definitely outperforming in an otherwise weak market. And Dixon too has come off substantially from the lowest point of the trading session. Nuresh, a word as far as Bharat Dynamics is concerned and other defense names, which is the strongest chart?
So they've been, say, Bharat Dynamics has been pretty sideways. Hindustan Aeronautics has not seen much of a correction. And the whole PSE segment, so like I've been saying for some time, so if you look at NTPC, Power Grid, they're actually flat on a day like this. So the whole public sector enterprises is the place where you want to be right now. One, it's a hiding place, but I believe there could be stocks which could actually rally. For example, if you look at a Power Grid today, one of the only places where FIIs hold 32 to 33% of the shareholding, and promoters, which is Government of India, is at 51%. So one of the few places where you have seen FII holding go up over the last few quarters. So I think the best hiding place right now is public sector enterprises. The whole index is at closer to a 5-year high. And this is the fourth attempt over the last 6 months. So if I have to place a bet, which is the place I would get the lowest risk and the highest reward, low beta stocks, similar change. We saw this happening in ITC also previously at 200. It just stayed there. That was your first indication. And then the shareholding shifted in FII's increasing stake. That is something what is happening in this basket of PSEs. For the first time, we are actually seeing FII's increasing stake.
What's happening with PVR? That suddenly spiked 5%. I know Pathan has been doing quite well, 100 crores already on day 2 itself. But yeah, that stock is doing quite well. And some of the other urban consumption names, the likes of TTK Prestige, is also doing well. And at least for the Nifty, also from the lowest point, there has been a sharp bounce back of almost 100 points. Nuresh, your take PVR?
So very interesting price formation if you were to look at PVR. Irrespective of all the bad news over the last 6 to 12 months, every time the stock has gone to 1600, it has bounced back. So 2000 was the price when the PVR Inox deal got announced. And that has been a problem zone. We had one specific move only going about that 2000 to 2250, and then the release happened, and post that it just corrected. But over that period, even pre Lal Singh Chadda and post, 1600 has been a base. Over the last 2 to 4 weeks also, we've seen 3 to 4 attempts. So that's your first indication that the stock is forming a bottom. Now, the next one is whether it can cross 1800. Whenever it does that, that would be a trend change for the stock.
Well, one can surely say Bollywood is surely back, because you and I have watched Pathan, so we know all the releases that are in the pipeline and some big ticket ones. So I guess it'll take just one more hit for PVR to take it up to 1800. But Neeraj, aside of PVR, within autos, I mean, good numbers from Tata Motors, Bajaj Auto a beat, Ashok Leyland holding out well, M&M continues to do well. Do you think the hands have now changed from an M&M and a TVS to maybe a Tata Motors or any other?
I think Maruti, the numbers are very encouraging. The numbers are very good, and the kind of lineup they have now. I think Maruti is one which has seen a lot of upgrades also. And the stock has not really moved too much after the results. So Maruti can be one stock there which I think people will be looking at investing at these levels. I think Mahindra continues to be good because valuation there are not expensive. So Mahindra will continue to be one of the favorites there. And plus Tata Motors, like we've been mentioning earlier, that it can be a dark horse. With the kind of numbers we've seen, I think it should continue performing well. So among the four-wheelers, if you have to take in that order, I think Maruti, Mahindra, Tata Motors can still be, good candidates for decent returns this year.
Talking about this year on a YTD basis, of course, at the Nifty level, there are two Adani group of stocks which are the top losers. But after that, it's Bajaj Finance and Bajaj Finserv. Bajaj Finance, of course, come out with its numbers today. And very interesting that before the number, there was a report by Jefferies this morning wherein they've upgraded the counter to buy from hold. And the target price was raised from 7,280 to all the way 8,160. So big upgrade coming in there. Numbers expected later today. So we'll watch out for that. But while we wait for that, Neeraj, just your take as far as where Bajaj Twins and HDFC Twins are headed?
I think Bajaj Twins have seen a correction. We've seen a lot of the stocks which were at high valuation have seen the correction and they have been hit more. I think Bajaj Finance and Bajaj Finserv also have taken a hit because of that. But after the correction, I think they become attractive now. They've again come in, accumulate kind of a zone. So one should accumulate Bajaj Finance because we've seen that the Bajaj Finance has been managed so well, even in the COVID downturn, and the company has been really very well managed. The collection efficiency really pick up very fast, and they've been holding on to their margins also. So I think this kind of a correction has given an opportunity to people who want to invest into this kind of a company for a longer term. And HDFC Bank, again, I feel that valuation-wise, still they are not at the higher band. So even from these levels, I would say that one should hold on and buy on dips. So you can enter to HDFC Limited, I think, because the merger ratio. So that still remains that as a market performer, which can give you a decent return this year.
So that's the take coming in as far as financials is concerned as well. In fact, let's try and get the BTST ideas out of the way. Naresh, let me first come to you and then I'll come to you, Arpit.
So I'll be a little defensive here. Would be a sell and a buy. A sell on Infosys. The buyback quantity is almost getting done. Stop loss at 1530, a target price of 1450. Second is a buy on NTPC. Continues to be a stock which holds on to the markets even in this condition. So a stop loss at 164 and a target price of 170.
Okay, so a bit defensive there. NTPC is the buy that Naresh has. But Arpit, what about you? What's making it to your BTST or STBT radar?
So even we have one buy side and one sell side. Broadly, the market favors in favor of the bears. But from the buy side, one is the Bharti Airtel. So Bharti Airtel has formed a good base near 760 zones. And from past 11 session, it is holding well above 770. So that would be buy at current level with keeping stop loss 755 for an upside move towards 800. Whereas on the sell side, as selling pressure is seen across financial space. So within that is BOB, Bank of Baroda. It has given a weekly breakdown below 160 zones. We are expecting 4 to 5% downside movement. So one can sell at current levels with keeping stop loss of 163 for a downside move towards 148.
Okay, that's pretty much the trading flavor right now. But Naresh, given the fact and the very pertinent observation that you made earlier today, that we seem to be in the rocky boat alone. Yes, we've had a great 2022 of outperformance vis-a-vis the other emerging and global markets. But right now in this weakness, we're completely solo. Also relatively, because other markets which had sold off all through the last year, they're the ones which are seeing a sharper recovery coming in. So what happens next? Because when we come back to trade on Monday, global markets would be as is. I don't think something drastically would go wrong with them.
So interesting, say another data point, if you look at the markets falling off 500 points in two sessions, you would expect USD INR to be under pressure, right?
Yeah.
It's up only 10 paise. Right,
so, yeah.
Right. So there is no pressure over there. The GSEC yields have not seen a pressure. We are not seeing pressures even in the parameters on the local side.
Yeah.
Right.
Because
so,
typically when there is a huge sell-off, the rupee also feels the
heat. We were at 82.50 just a couple of weeks back, right? So we are not seeing any risk of pressures which are there on the local as well as the global side. So this is more like a market which is light. Then you got an event and it just spooked off the markets. So interestingly, none of the parameters look negative. So if somebody is an investor, this is the time to deploy some money, the next on the budget day. As a trader, it is difficult because as a trader, you don't want to go with positions into the event, right? Because the event if you look at 2021, there was a plus 4% uptick. You go to 2016, there was a plus 4% uptick. Even in 2019-20, so there can be a 3-4% uptick or a downtick purely on the budget. Very interestingly, the day LTCG got announced, on that day, budget day, we were down only 0.1%, but the next day we were down 5%, right? So you don't want to be taking a trading position for the event, and then you have the next day you have the Fed rate as well as RBI. So you have the next 3-4 sessions where you just have to see the index, let it be. As an investor, you can go ahead.
Yeah, probably not the best time to trade given that there are so many factors to watch out for. But Neeraj, I wanted your take regarding ACC Ambuja, and I'm keeping the Adani factor inside purely from cement sector, perspective. These companies have decent businesses. They are number second when it comes to their total capacity, and on account of the news flow, you have other names like Star Cement, Nuvoco, etc. also slipping. You had Ultratech, which reported weak set of numbers. Just as a cement pack, what would be your call? Neeraj, the question is for you.
Yeah, I think you're absolutely right. When it comes to stocks like Ambuja Cement, ACC, there are companies which have capacities which are doing decent business, and there is demand because of infrastructure growth, because of general economic growth. So demand will continue. So that is not going anywhere. So I think for these kind of companies, these just may be an opportunity because they're having a rub-off effect on other cement companies also. But I would say that Ambuja Cement specifically, if you see, the stock was definitely looking expensive on valuation. It was trading at 550, 60 kind of level. But this kind of a 30, 40% downside in just 2, 3 days, I think it made it attractive even on valuation. So I would say that for an investor, this is an opportunity. If you are looking at investing for, at least 6 months to 1 year, I think this is a good opportunity to get into stocks like Ambuja Cement. So in the shorter term, definitely there can be volatility, which is associated to the Adani Group stocks and budget also coming next week. So some volatility definitely be there. But I think for a long-term investor, definitely it's an opportunity.
Okay, so that's the take as far as what the cement sector is doing. But at least the good news is by end of the trading session, there has been a decent amount of bounce back. So when we are seeing the cut of around 2.25%, 2.1% when we had gone below the mark of 17,500, since then there has been a decent recovery. And ditto can be said about the broader markets as well, because the mid cap and the small cap index were down over 2 percentage points at one point of time. In fact, in the last few minutes, there has been good recovery in some of the counters. PVR, we were flagging out that stock. We also have Imami, which is up 5%. Kajaria Ceramics has a good day. AIA Engineering, which reported its numbers earlier today, is also reacting to that. So 5% higher there. Max Healthcare, TTK Prestige, Dr. Reddy's. In fact, some of these pharma names are also doing quite well today. Arpit, from the entire pharma space, what would your top bet be?
So within the pharma space, if it's today, there's been quite respite. Within pharma space, Dr. Reddy. So Dr. Reddy has been trading in a range between 4,200 to 4,400. And we can see a clear breakout above 4,350 zones. So once we see a breakout above 4,350 zones, we can see a good uptick of 150 points. So our top bid within the pharma space would be Dr. Reddy.
Right, okay, just 2 minutes odd left to go before we wind up for the day. Neeraj, we'll let you go on that note. Thanks as always for joining in. Let's see where we're closing in for the day, and a little bit of a respite. At least got closer to that 17,700 print on the Nifty futures, but the Nifty spot also has seen a bit of a recovery coming in. We're just about defending that 17,600 print there. 17,621 is where we're shutting shop for the day. In terms of sectors, yes, automobiles as well as pharma have been the more resilient ones, and I can say the same about technology. I mean, a 1% or less than 1% fall is a lot less than what you've seen with some of the other, sectors like banks, financials, infrastructure, telecom, cement, and cap goods. The big losers today, Adani Enterprises goes home with an 18% cut on the futures. Adani Ports down 15.25%. SBI down 5%, ICICI Bank down 4.5%, ONGC down 3.5%, IndusInd Bank, Coal India, Axis Bank, Kotak, HDFC Bank, Reliance down nearly 2% as well. On the flip side, Tata Motors, Bajaj Auto, DRL, ITC and Cipla have been the star performers in today's trading session. Of course, the breadth was a lot worse. You had only 31 names by the end of it going home as winners, and the count was much lesser at the session lows today. 163 names are closing in on the declining side within the F&O markets. Dixon, a result reaction there, 20.5% cut. Then, of course, Ambuja Cement as well with a 16.25% cut. And then Indus Tower as well, which shaved off quite a fair bit, down about almost 13% in trade, is how it's shutting shop for the day. So that's pretty much been it in terms of what we've seen as a trading texture for the day. But Naresh, you think that today's fall has come in on the back of bigger volumes, and could we see a follow through on Monday as well?
So I would expect we actually get into a case where the next 2 days we go more silent. So we've seen 2 days of strong correction, but today we've at least seen the last half an hour did not see much more panic selling as such. So that's your first indication of absorption. On Wednesday, we continued to do the slide. So first indications of absorbent, and overall till the time global is fine, what we've seen a 3% uptick could also happen out of nowhere, just the way we've seen a 3% downtick.
Okay, fair point. On that note, we're going to wind it up and call it curtains down. Thank God
Finally
it's Friday.
for the week, yes.
And with this kind of a market fall, sure enough, you do need that weekend off. We'll wind it up then right here, and we'll see you with all the market action on Monday morning.